Good morning, traders. This is Chris Buss with Traders Profit Compass with a morning look at markets for Monday, August 24th. Okay, hope you all had a nice, relaxing weekend. In the weekend navigator that I sent out yesterday, spent quite a bit of time looking at the yellow flags in the market, and we've got a bunch of them as we've been talking about. Poor breadth, divergences all over the place. Just 101 things that would leave most people concerned and maybe leaning bearish. Everything says bearish except price, and that's what pays. So we've got to remain focused on our price, and as long as price is going up, things are bullish. Yes, we can be aware of yellow flags out in the marketplace, but I don't think it's to the point of scaring us out of positions or having us bite our fingernails on the sidelines. Let's participate, continue to participate in a responsible way. We don't want to get out way over our skis and, levered up to the hilt. I think if we keep our allocations in line and keep our eyes open and heads on a swivel, we'll be able to see and sense when it's time to start exiting some of those long positions. So let's jump into it. Here on the SPY 4-hour, we've gone over it that, we're testing the low side of our channel. ES futures are showing up almost 30 handles. So that's gonna pop price up here into the 342, 343 area, which would put us back inside the channel. So until we start getting closes below 335, I think we ought to remain bullish on the longer time frame. So, this pop in the morning here on COVID treatment news or optimism will get us back in the channel and alleviate some of these immediate concerns that we would be rolling over into this zone between 335 and say 327, right in there. Let's zoom down to the 30-minute chart. As I said, we're set to gap open. Whether it's a bigger gap or a smaller gap is really here nor there. We will have a gap below that'll get filled at some point. We don't know if it's going to be, in the first 15 minutes when they, flash it down, or just leave it behind and go higher. So use your gap rules, your opening gap rules. Set yourself, either the first 5-minute or first 15-minute range. And depending on how aggressive you want to be, if price breaks above the first 15-minute range, you can take it long. And if it breaks below the first 15 minutes range, you can take it short and look for a gap fill back here to this 339.60 where we closed on Friday. Okay, if we do get that backfill, I think this would be a perfect place to get long against Friday's close and, Friday's high. There should be nice support there. If it breaks through, it fails. But I think this is a place where you want to try to get long against Friday's close. So opening gap, be careful, be aware. But that's a nice opening trade if you can catch it, if you get that gap fill. But if it breaks higher, just get long and know there's no natural sellers above. So, we can just run the rest of the day. You never know what's going to happen. Just have a plan for the bull side and the bear side. Moving on to Qs, not going to spend a lot of time on this chart. This is a 4-hour channel we've been in. We're going to pop above the midpoint of the channel here this morning. We'll see if we can hold that. And if we can, this midpoint line can act as support going forward. So just as it did down here, we could just run up, to 300 or so at the top side of this channel before we check back. So I don't think we need to be, overly concerned about the bear case immediately. We just need to watch FAANG like a hawk. And if we see, material weakness in FAANG, the Qs are obviously going to pull back. Here's a 30-minute chart. We've got this trend line coming up. We're going to have a big gap up this morning. Use your same strategy that we just discussed on the SPY. Set up your first 15-minute range. If it breaks below, may get a gap fill down here to 282. If it takes out the first 15-minute range on the high side, you can get long and see how far it takes us, and farther and farther into blue sky territory. Just like in SPY, I think I want to be a buyer right here at 282 if we get a check back with a tight stop below. Now, if that were to break, we're going to come back in here to 279. But as it stands right now, if we get that opening gap fill, I would, if I was short for the gap fill, I would reverse my position and look for a bounce there at 282. IWM is set to gap up also, but it's going to gap up in this area here around 156. This is the index I have the least amount of faith in, at least on the bullish side. I have my doubts whether this is just going to, break through this resistance and then go on up here. You'd have to respect price if it did that. If it breaks above 156.50, you can buy it and look for a move up to 158. I'd be more inclined to, fade that move. I just don't think the value / cyclical trade is where it's at right now. And for that reason, I would be wanting to fade this. You'd have to change your mind if price took out 158, and if it did that, I would be a buyer there looking for 160. But to me, fade anything below 156.50. I'm going to be neutral in this area between 156.50 and 158, and then I'd be forced to be bullish above 158. And certainly above 160, that would change everything. And you definitely want to be, if you're sitting on the sidelines here, you've got to get in at 160. Quick run through FAANG, as we always do. The market leading stocks. This is where your focus should be. I think if you're an intraday trader, it's where the movement is. It's where the action is. Facebook really didn't do a whole lot on Friday. I think the key level remains 266.60. I think you can be long above that. And below that favors a move back to this 261 level. But I think you got to be leaning bullish. And anything above 266.60, I would be long, and your target is going to be this prior high up at 278. So that's a $12 move right there, which would be pretty darn sweet on a Monday if we were to get that. Apple, of course, had the monster $25 move on Friday. Nobody saw it coming. You might think that, oh, wow, it went $25, Friday, the move's got to be over. Well, I want to call your attention to this little flag here. And if we take that measured move target out of this 1 hour flag, measured move puts it up around 525. So my message to you this morning is don't think that that can't happen. It certainly could happen. I would stay long against 493. If it came up here and then collapsed and lost 493, I think it will come back further. But for right now, I think the bias has to be long emerging out of this bull flag. If you got a little baby pullback to 493, I think you buy it with a stop just below and see if it can run up to 515 or 525, whatever it's going to do, and that would be a massive win. Don't be the guy trying to shoot against this, trying to short it. Wait for a signal, wait for a trend or a support level to break. Then you can, take your shot if you think it's going to pull back. But for right now, everything points bullish. Chart pattern, indicators, sentiment, everything. So try and stay long. Find a pullback here to 493 and pull the trigger. Amazon, little tougher setup. We're in here in no man's land between support at 3250 and resistance at 3335. These triangles, these pennants, they can be problematic. Yes, you can buy a breakout above the triangle or, try to get short here. But I'm more of the thought that, wait till you get to these horizontal boundaries. Buy the breakout above 33.35 and look for 3600 kind of thing. And if this breaks down below 3250, we can look to these lower levels that have treated us so well in the prior weeks. I don't think you need to mess with it right here in the middle of the range unless you're really on top of it and really got, the pulse of Amazon. I'd be more inclined to wait till it gets to the edges of the trading range. Microsoft had another failed breakout. It failed right here at 216 where it has in the past, and now it's back inside this 211 to 214 and a half, 215 range. I have dropped in a midpoint line of the of this box here at 212.50. I think you can take a shot long on this morning. It may gap up into this area. I haven't looked at the pre-market chart yet, but if it gaps up above, just use the same rules that we do on all our opening gaps. And I think definitely if it clears 216 and holds it, you can be long. This would all be blue sky all-time highs above 216. I did see a lot of bullish order flow last Thursday and Friday in the name, looking for 235 and higher into October. That doesn't mean these guys are right. It just means there's institutional money behind Microsoft to go higher. So I want to lean on the bull side as long as it's working. Use these dips to to get in long with a stop just below. Google, really the same setup as Amazon. I'm not inclined to mess with it here in the middle of the range. I'd rather buy a breakout above 1589 or buy a dip that holds down here at 1567 with a stop just below as locations to try and get long. Now, if 1567 were to break, then I think you're coming back here to 1538. So trade level to level, right here in the middle of no man's land. I think it's kind of hard to, take a shot one way or another. Let price lead the way, and then have a long bias against 1567 or on a breakout to new highs. I think those are buyable locations. Be careful on a break of 1567 for a deeper pullback. Just want to flash briefly here a daily chart of the SMH, which is the semiconductor ETF. I want to keep an eye on this as a potential canary in the coal mine for tech and cyclicals in general. You can see we're working our way up this wedge. I think I pointed out in some of the notes that some of the charts are getting kind of funky. Not all of them, just some of them. And that has resulted in price pulling back to this trendline support. And with prices strong today, you'll probably see, semiconductors up. But what I want to do is watch for any early breaks of semiconductors out of this wedge. And I want to have my antenna up for when and if that happens. That would be a really important cautionary development in my eyes if this wedge were to break. So I want to keep my antenna up on that. So, okay, that wraps it up for this morning. We've got a big gap up on COVID treatment optimism. Be careful and ready on that opening gap below. If the first 15-minute range breaks low, you can get short for potential gap fill down to Friday's close, at which point I would be a motivated buyer if you got that move back down to Friday's close. If it breaks above the first 15-minute range, I think you can take that long and just see where it takes us the rest of the day. For longer-term swing traders, keep that bullish bias. Of course, watch your individual names for breaks of support and respect your stops at all times. And I think it'll be fine. Keep that bullish bias. Ignore the yellow flags. Just be aware of them. But price is telling us, at least at this point, it wants to go higher. So, thank you very much for your time this morning. If you like the content, please give me a thumbs up. And if you're new here, please subscribe to the content and you'll get notified when fresh posts are made. If you look over in the show notes, there are links to the blog and how to register for all my content. And you'll get that delivered directly to your mailbox each and every day. This has been Chris Buss with Traders Profit Compass. Have a good day of trading and talk to you soon.